is the market telling us that we have come back into a bull market, or it is just the beginning of a bear market, of a low visibility market?
So Francois, it's been a while since you've been in the Jugoscopy studios. Can you describe to us the current status of the global equity markets?
Yes, we had recently a correction in the market. Actually, this correction started not with the current fiscal year, started at the end of the last summer, 2015. We had a change in volatility regime, means very few stocks were pushing the market up, and the broad market was more or less stable. Moreover, we had also a problem of valuation of the market, and we have seen recently also that the profitability of the market was not that high. And if you look to this graph, you see definitely in blue the profitability in terms of earnings per share of the European market, which is below its tops of 2007. And we see that, for instance, the European equity market has not a higher profitability at first than in 2007. And moreover, that the profitability, even over the last 3 years, is even declining, which is quite surprising and maybe coming back to the mind of investors. In the US, it's the black line. There you have a flattening of the earnings per share recently over the last year. But at least it's a flattening. It's not a declining of profitability. And we are above previous top. That maybe came back to the mind of investors, and that's why investors were a little bit confused and prefer to reduce their equity exposure in their portfolios.
Absolutely, it's very surprising. So how have investors and markets reacted following this market correction?
Yeah, I mean, investors, they had this bloody sentiment to say, oh, I need to cash in unrealized profit immediately. So they were, in a first step, selling positions where they had a lot of profits. Most of them were mostly in the small cap area and in the growth industry. Those were the stocks that they sold immediately, cashing in profits and building up cash position. That's what we have seen. And also in their equity exposure, they were focusing on core investments, means core markets. American investors were focusing to American stocks, European investors to European stocks, and also within the regional approach, they focused on blue chips. That's how they reacted.
And in your opinion, how should investors react following this low visibility market environment?
Currently, I'm speaking in the name of my bank and in the name of our investment policy. We are avoiding, that's true, currently peripheral market, which are not core markets like, for instance, Japanese equities or like emerging equities. We are staying on the sideline in this case. Moreover, we focus on a much more diversified approach. We would say, be careful with stock picking. If you are a private investor, let's focus on diversified fund, because otherwise your risk that you are going to take with one stock pick is going to be too big for your portfolio, for the size of your portfolio. That's why we would say keep on diversified investment vehicles like equity funds. Do avoid maybe in a first steps individual stock picking.
And how have large consumer stocks been affected by this market correction, and how have they reacted over time?
Well, it's an essential question. Actually, those are leading indicators. Those stocks like Nestlé, like L'Oréal, like Unilever in Europe, and like other similar name in the US, those are the leading indicator of the market. Is the market telling us that we have come back into a bull market, or it is just the beginning of a bear market, of a low visibility market? When we look backwards to the history and when we look to those blue chips, which are the last holding of every equity investors, nobody wants to sell these types of investments. When we look to stocks like Nestlé, like L'Oréal and Unilever and other stocks in the market, in previous crashes, they corrected by roughly 30–40%. Here in the case of Nestlé, we see definitely in 2002, after September the 11th, we had a market correction, a value correction or depreciation of 1/3 of the value. In 2008, 2009, we had exactly the same correction in Nestlé. 1/3 of the value of the stocks was lost. And currently, what is the correction? Nothing. Roughly 5–6% in the case of Nestlé. In the case of L'Oréal, it's a little bit higher. But we are far, far away from a correction like half of the value of L'Oréal was lost at that time. It means there is no capitulation of the investors yet. So currently, if you want to be exposed to equity, you should definitely not buy those equities. You should buy the one that are leading the corrections, and unfortunately those are exactly the stocks you do not want to buy currently. Those are financial stocks and commodity-linked equities. And unfortunately for equity investors, for stock picking, those are just the ones that you need to purchase currently.
Fantastic. Well, Francois, thank you so much for coming in today and sharing your insights with us.
Has been a pleasure.
Well, that's all from myself and Francois, but for all the latest Jugoscopy updates and exclusive interviews, do keep clicking back. Goodbye for now.